in today's show, Bitcoin starts 2022 all over again. I'll be sharing with you the 5 things to watch out for in the Bitcoin market this week. And as crypto analyst, tech dev shares here, 12-hour Bitcoin volatility squeeze forming first since January. This one is during green trend bars. Breakout arrow will indicate direction when it occurs. And as on-chain analyst Dylan LeClaire shares here, the 10 to 2-year yield curve officially inverted. And as Glassnode Analytics shares, Bitcoin exchange outflow volume recently hit a rate of 96.2 thousand BTC per month. Aggregate exchange outflows of this magnitude have only been seen on a handful of occasions through history, with most being after the March 2020 liquidity crisis. Great point. And as Holger shares here, the biggest monetary experiment in history. Most recently, the Bank of Japan fired up the printing press again to keep long-term interest rates low. Meanwhile, Bank of Japan's balance sheet now equals 136% of Japan's GDP. In comparison, the ECB and the Fed look like amateurs. He makes a great point. And as shared here, Bitcoin Weekly MACD just confirmed a bullish crossover. In breaking news just in, Citigroup publishes 4 frameworks for valuing Bitcoin with its highest estimate of over $120,000 per coin. Also in today's show, Arthur Hayes gives end of the year prediction for Ethereum. That's right, expecting Ethereum to significantly outperform any layer 1 chain that is promoted as faster and cheaper than Ethereum. Hayes set the price target for Ethereum in 2022 as $10,000. Also in today's show, here's what will ignite a Bitcoin eruption to $58,000, according to top crypto strategists. That's right, we're talking about Trader Sheds, quoting him here. You've got 46,000, you've got higher low structure, now you've got this ascending triangle. This is the most logical way to look at it as a bull, and the ascending triangle is normally a bullish continuation pattern. The measured move would be the height of the triangle. It gets us to around $56,000 to $58,000. Also in today's show, here's how Bitcoin could explode by over 10,000%, according to global investment giant VanEck, quoting them from their latest report. The implied price of Bitcoin using the same aggregate monetary base that we use for gold is around $1.3 million per coin. The implied price of Bitcoin using the global M2 is $4.8 million per coin. We'll also be taking a look at the overall crypto market. As you can see, many of the cryptos are currently correcting and in the red. But where's the Bitcoin price likely to go next? Find out all this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs, along with a $100,000 Bitcoin price. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. Today's episode is brought to you by FTX US, built by traders for traders. That's right, FTX US is the best way to buy and sell Bitcoin, Ethereum, Solana, as well as other digital assets. And did you know you can trade crypto with up to 85% lower fees than its top competitors? That's right, there are no fixed minimum fees, no ACH transaction fees, and no withdrawal fees. Also note that FTX is the only leading exchange that supports both Ethereum and Solana NFTs, and there are no gas fees. And you might have heard of them from their Super Bowl commercial with Larry David, or their partnership with Stephen Curry and Tom Brady. That's because the world's biggest names trust FTX. And they have a special promo they're running right now, where if you download the FTX app today and use my promo code CryptoNews, you can earn free crypto in every trade over $10, truly making this a no-brainer. And the more you trade, the more you earn. So go ahead and download the FTX app today by clicking the link in the description right down below. Use my referral code CryptoNews, and let's start stacking those sats, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. I just got to Florida. How's it going, crypto fam? Make some noise in the live chat. Now, Bitcoin starts a new week and a new quarter as if it were starting the new year at just over $46,000. Now for the 5 things to watch out for in the Bitcoin market this week. Number 1, inflation meets fresh money printing. That's right, there's been much talk about the end of the post-COVID easy money period and the impact it'll have on risk on assets such as Bitcoin, as the United States Federal Reserve pledges to reduce its record high balance sheet and keep raising key rates. Commentators have sounded the alarm over what could be a shockwave hitting investment into crypto. So far, however, there is a little sign that a fundamental shift is underway. While in Asia this week, it seems like the opposite is true. As highlighted by markets commentator Holger, the Bank of Japan has added to its balance sheet, printing even more liquidity. The Bank of Japan already had the largest balance sheet relative to GDP, and that trend is only increasing, now at 136% of their GDP. So for Holger, this is not only a surprise, but could be the biggest monetary experiment in history. Quoting him here, in comparison, the ECB and the Fed look like amateurs. producers, he argued, and you can see the central bank balance sheets right here in this chart. Pretty shocking, eh? If more printing means more good times for risk assets, not everyone is even convinced that the long vaunted balance sheet reductions will even last. Central banks, they claim, will soon have no choice but to restart liquidity injections. Quoting them here, there is no government ever that resisted the temptation to print money in order to pay its bills and placate its citizens. The government will never voluntarily go bankrupt. This is axiomatic. I challenge you to contradict me with evidence, said Arthur Hayes, the ex-CEO of derivatives giant BitMEX, who wrote in a blog post in March and also shared, therefore, if your time horizon is in the years, it's time. If you mess with the bull, you get the horns. Remember, it's not gold or Bitcoin that's increasing in price. It's a decrease in value of fiat currency in which they are priced. And he makes a great point. Now for the second factor to keep your eyes out on this week in the Bitcoin market, spot bulls aim for $50,000. That's right, the lack of volatility is the main talking point among Bitcoin traders and analysts as April 4th gets underway. Some classic but brief excitement around the weekly close faded within hours, with bears still failing to take the yearly open away as support. And with that, Bitcoin is in exactly the same place it was 3 months ago, but short-term price signals already seeing some calling for continuation higher. Among them is popular analyst Tech Dev, who highlighted Bitcoin's first volatility squeeze since January playing out on the 12-hour chart, as he shares here on Crypto Twitter. 12-hour Bitcoin volatility squeeze forming first since January. This one is during green trend bars. Breakout arrow will indicate direction when it occurs. Tech Dev used indicators, including the Bollinger Bands volatility measure, which is now seeing Bitcoin surfing in the middle of the channel with a skew to the upside. And as previously reported, the odds are already on for an attack on the $50,000 mark, which will be Bitcoin's first time this year. April itself, meanwhile, has much to live up to, and of itself, this month has historically been good for Bitcoin. Let's not forget, in a few more days is the big Bitcoin conference in Miami. There's going to be over 35,000 people there, including myself from all over the world, which is also very bullish for the King Crypto. Now for the third factor to keep your eyes out on this week in the Bitcoin market, buyers usher coins out of the exchanges in March. That's right, it's no secret that a lot of Bitcoin has been leaving exchanges this year, but the latest data shows just how the supply squeeze is playing out. According to on-chain analytics firm Glassnode, last month saw exchange outflows. Unlike many others, exchanges are down by the equivalent of almost 100,000 BTC. Can you say incoming Bitcoin supply shock? Historically, there have only been 2 occasions in Bitcoin's lifespan when outflows surpassed the 100,000 BTC mark, making March amongst the highest. Quoting Glassnode Analytics right here on Crypto Twitter, Bitcoin exchange outflow volume recently hit a rate of 96.2 thousand BTC per month. Aggregate exchange outflows of this magnitude have only been seen in a handful of occasions through history, with most being after the March 2020 liquidity crisis. Now, should investors be reaching the bottom buying behavior after the COVID crash, the implications should be clear, but may take a while to play out. In 2020, while Bitcoin rebounded after dropping 60% in days, it wasn't until Q4 the price performance really began to change. Now, fellow analytics platform CryptoQuant, which tracks the balances of 21 major exchanges, meanwhile shows that the overall Bitcoin stocks are now at their lowest since August 1st of 2018 at 2.3 million BTC. In a meandering downtrend in 2022, gathered pace in March, which saw a total of 77,000 BTC withdrawn the private wallets. Now for the fourth factor to keep your eyes out on this week in the Bitcoin market, never mind the alt season. An unusual event has occurred when it comes to Bitcoin's relationship with the alts. Combined open interest and volume on altcoin derivative markets have surpassed that of Bitcoin for the first time in over a year. That's right, the move was noticed by crypto analytics platform Coinalyze, which openly suggested that the much fabled alt season may now be here. That's right, in such a perspective, chimes with data showing considerable inflows into altcoins last week, which one commentator argued showed risk appetite amongst investors increasing. Let me know if you feel alt season is amongst us. And now for the fifth and final factor to keep your eyes out on this week in the Bitcoin market, hash rate hits new all-time high. Let's go. Hot on the heels of record difficulty for the Bitcoin network, hash rate just hit new all-time highs, what shows miners' belief in the long-term profitability of participating in the network. The hash rate is now at 223 exahashes per second, which you can see in this chart brought to you by Mining Pool Stats. Now, with only an estimate of the processing power dedicated by miners, the hash rate has never been higher, and according to proponents, will continue to grow regardless of external attempts to rein in Bitcoin. Bitcoin mining is pretty much the most anti-fragile system designed by man, said Francis Pouliot, CEO of payment processor Bull Bitcoin, who argued in a well-known blog post about the Bitcoin hash rate and energy consumption last year, quoting him here, "Any attack on Bitcoin is guaranteed to make Bitcoin stronger, which itself implies a higher price, a higher hash rate, and a higher energy consumption." Also like to point out that the Bitcoin price follows the hash rate, so expect another leg up. I want to give a quick shout out to iTrust Capital, the world's largest crypto IRA platform with over $3.5 billion in transactions. If you're looking to trade crypto tax-free, look no further than iTrust. And yes, they are backed by the world's leading institutional cold storage provider, Coinbase Custody, with a $320 million insurance policy. So go ahead and use my referral link in the description right down below to take advantage of the #1 crypto IRA provider in America. And if you sign up today, you're going to receive a $100 funding reward as a free bonus. So go ahead and use my referral link in the description right down below, and let's start stacking those sats tax-free. And as the Bitcoin Archive shares here, Bitcoin Weekly MACD just confirmed a bullish crossover. Let's go. And this just in breaking news, Citigroup publishes 4 frameworks for valuing the King Crypto Bitcoin with its highest estimate of over $120,000 per coin. But before I break down next story of the day, Arthur Hayes gives his end of the year price prediction for Ethereum. But first, let's take a quick look at the overall crypto market. As you can see, many of the major alts are currently correcting, and in the red, Bitcoin down about 0.75%, trading just above $46,100. We have Ether down 0.5%, trading just under $3,500. Solana down 3.5%, trading just under $133. While Avalanche, Binance Coin, Polkadot, Luna, and XRP all correcting and in the red. But all right, now let's break down our next story of the day. The former BitMEX CEO explained to his readers why 2022 will be a big year for Ethereum. He considers that the network, after the transition to proof-of-stake consensus, will function as a commodity-linked bond. In contrast, the former CEO called Bitcoin pure money that intrinsically yields nothing. Hayes sees Ethereum as an investment better than not only Bitcoin, but other layer 1 protocols, which are mostly overvalued. Plus, the transition scheduled to occur in the summer of this year will be the game changer that puts Ethereum ahead of its competitors. Now, Arthur Hayes is the co-founder of BitMEX, and he didn't shy away from the deep conviction on Ethereum in his most recent blog post. He stated that his target allocation for 2022 would be 25% BTC and 75% Ethereum. Very interesting, right? This came after his prior allocation as 50% BTC and 50% Ethereum at the beginning of the year. Hayes made such an adjustment partly because he saw Bitcoin as money, while the post merged Ethereum as a commodity linked bond. Quoting him here, ETH is a commodity used to power the computer, not a pure monetary instrument. And in terms on the yield for staking Ethereum, Hayes quoted the analysis completed by Justin Drake, an Ethereum researcher who projected stakers can see an APR of around 8 to 11.5% after the transition. Hayes outlined that for a 5-year Ethereum local currency bond, the Ethereum/USD price would have to decline 29.35% after 5 years, assuming an 11.5% yearly yield for investors to lose money. And for hedging the risk of buying this ETH bond, investors can choose to sell 1-year Ethereum forward futures contracts. He wrote, "The broker quoted me at a mid-market premium of 6.9%. That means to hedge my local currency ETH bond, I actually receive income." To institutional Bitcoin hodlers like Michael Saylor, who issued corporate bonds to purchase BTC, Hayes recommended they should issue debt to purchase Ether instead. The reasoning behind it is that he saw a boring stonk buying ETH will naturally be branded by the metaverse and DeFi company, which can help hype up the stock price. Issuing ETH bonds, meanwhile, is a positive carrying trade to the company, but due to the proof-of-stake mechanism being much more environmentally friendly than the proof-of-work mechanism, Hayes argued ETH bonds can attract ESG funds and are immune from regulatory concerns. Now let's discuss the Ethereum killers. Hayes' bullish take on Ethereum also derives from his analysis on the major Ethereum killers on the market. Ethereum has the largest number of developers compared to other layer 1 protocols, while this price/developer ratio shows that Ethereum has the lowest score amongst all competitors. Ethereum has approximately 4,000 developers, which is 3 times larger than the chain with the second largest cohort of developers, which is Polkadot, which has the second largest cohort of developers. And also looking at the price, loan-to-value price, and address ratio, Hayes concluded that Ethereum is the least expensive with concrete performance that positions itself as a great investment against other smart contract platforms, and expecting Ethereum to significantly outperform any layer 1 chain that is promoted as faster and cheaper than Ethereum. Hayes set his price target for Ethereum in 2022 as $10,000 per ETH. ETH. Let me know if you agree or disagree with Arthur Hayes that we can realistically expect a $10,000 Ethereum price before the end of the year. And before I break down next story of the day, here's what will ignite a Bitcoin eruption to $58,000 according to top crypto strategists. But first, let's take a quick look at the overall crypto market cap, sitting just above $2.15 trillion with 101 billion in volume in the past 24 hours. The current Bitcoin dominance is 40.8%, with the Ether dominance at 19.5%. And checking out the top gainers within the top 100 in the past 24 hours, we have Moonbeam leading the pack, up 25.6%, trading at $5.74, followed by Mina up 9.7%, trading at $2.98, followed by Dogecoin up 8%, trading at 15.2 cents. And checking out the top 100 cryptocurrency gainers for the week, you can see a sea of green. GMT up 130%, GLMR up 66%, Zilliqa up about 43%, CeLo up 21.8%, Solana up 20.9%, Aave up 37%, Waves up 29%. So a pretty good week for the altcoin market. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 52 out of 100, which is neutral. Yesterday a 48, last week a 60, and last month a 22 in extreme fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down our next story of the day. A closely followed crypto analyst and trader is unveiling what he believes will propel the King Crypto to his target of $58,000 per coin. Let's go. In a new strategy session, synonymous trader Sheds says that Bitcoin looks bullish after breaking out from an ascending triangle pattern. Quoting him here, you've got 46,000, you've got the higher low structure, now you've got this ascending triangle. This is the most logical way to look at it as a bull, and the ascending triangle is normally a bullish continuation pattern. The measured move would be the height of the triangle. It gets us to around 56 to 58,000, which is outlined right here in this chart. Now, while Sheds is bullish on Bitcoin, he says traders should keep a close eye on the 200-day moving average as a technical indicator, which is currently acting as resistance. And the analyst also highlights that market participants should watch how Bitcoin trades in the coming days. He says the bulls must defend Bitcoin's immediate support or face the risks of a sell-off event. As he shares here, below $45,000, we're in serious trouble. That's the bottom line from everything I know and have studied. So I talk about that. You want to hold the throwback. It initially failed. It hasn't completely failed yet, but there's some signs of weakness. In a technical analysis, a throwback is the tendency of an asset to revisit the breakout point in an effort to flip the previous resistance into support. As long as the bulls manage to keep Bitcoin above 45,000, Shed says that Bitcoin is one resistance away from igniting a 26% rally from the current prices. As he shares here, we've got to stay above 45,000. We have a good shot because all you have to do is really clear the 200-day moving average. You clear the 200-day moving average, I feel like 58,000 is going to be 80 to 90%. That's the measured move from the triangle in the last major cluster after the breakdown. So there you have it. Let me know if you agree or disagree with Sheds. And to watch the entire video entitled Bitcoin Breakout, check the show notes below the video in the description. But all right, now let's break down our final story of the day. A global investment manager is predicting the King Crypto could surge by over 100 times as hard currencies become less attractive reserve assets. That's right. In a new blog post, VanEck, emerging markets fixed income strategy chief economist Natalia Gurushina, and head of active emerging markets debt Eric Fine, said the upside for Bitcoin is potentially dramatic were it to be widely adopted as a reserve asset. That's right. Could you imagine Bitcoin actually becoming a world reserve currency? We're talking about millions of dollars per BTC. VanEck says that Bitcoin's price could one day hit $1.3 million. And according to VanEck, this projection would play out when the highly liquid global money supply monetary base is divided by the flagship cryptocurrencies existing supply. When the less liquid global money supply, M2, is divided by the flagship crypto assets total supply, VanEck says that Bitcoin's price could hit $4.8 million per coin. Let that sink in, crypto fam. Now, the monetary base is a highly liquid money supply. It consists of the physical currency, both notes and coins, held inside or outside of the banking system. M2 is the less liquid money supply. It consists of money held outside the banking system, such as checking deposits, saving deposits, and money market securities. The implied price of Bitcoin using the same aggregate monetary base that we use for gold is around $1.3 million per coin. The implied price of Bitcoin using the global M2 is $4.8 million per coin. Very powerful projections. And Bitcoin at the time of this recording is currently trading just about $46,200. We need to appreciate by between more than 2,700% and over 10,500% to reach VanEck's price predictions. According to VanEck, the freezing of Russia's foreign currency reserves following its invasion of the Ukraine is what will make alternatives such as gold and Bitcoin more attractive as national reserve assets. As he shares here, precious metals are the original reserve asset, but cryptocurrencies are a possible addition, replacement / portion. VanEck, however, warns that the projections are extreme and urges investors to consider lowering expectations. As he shares here, the prices generated in this extreme scenario in which either gold or Bitcoin becomes the reserve asset obviously needs to be adjusted downward. They are just a starting point. Investors should at least determine a subjective probability for the outcome, or they should choose an extent for the outcome. Are gold and Bitcoin going to be the sole reserve assets? Will that status be shared with other assets? And that's a great question, but let me know what your thoughts are surrounding VanEck's $1.3 to $4.8 million Bitcoin price prediction. Now for the top 3 comments from yesterday's episode. eCoin wrote, Aloha JV, nice to catch the quality crypto news leading up to the weekly close. Crypto news alerts always delivers. Peter Schiff is a trip. Cheers fam, greatly appreciate your continued support. Hodl. Our next featured comment comes from Inner Dino, who wrote, I knew it. Peter Schiff's alter ego is Satoshi Nakamoto. Yeah, exactly. It is what it is. We all knew it in the crypto community all along. And our third and final featured comment comes from Count Martlius, who wrote, CBDC is worker crap. That's right. Facts, fam. Stay away from CBDCs and stick to the king crypto, Bitcoin. And to be featured on tomorrow's episode, drop me a comment right down below.